That's right. Bring it on. Bring it on. Welcome to the closing beat, everybody. Happy Thursday. The days ever go by quick for you? Woo. Like the days, not the intraday, but like the whole day. Anyways, we're financial advisors here at Jazz Wealth. Hope you all are doing well here today. Have I ever shown you guys my dog? Cody's loving this. See, look at that little guy. That's him looking down on everybody. He does that. That's Dizzy. And we call him Dizzy after Dizzy Gillespie. And this is him looking like a little gentleman sitting there prim and proper and stuff, man. You ask him to take a picture, he does it. He's about 120 pounds or something. Yeah. Is that enough wasting time for you? Those of that one person that says we waste too much time, take that. Huh? I know it's out of good old-fashioned fun, but they don't like that we're taking too much time talking about stuff that has nothing to do with the stock market. Well, it'll be real easy today to talk about the stock market because there's a little change. I don't know that we can write home about this just yet, but just a little tiny change here in the stock market. And we're going to start with the S&P. So on the screen there, yep, we do see the S&P. I'm using the futures. We could actually, let's just use the futures. So we're back on top of this, what we talked about earlier in the week. Prior resistance becomes expected and current support. And that's where the market's been fighting here for a little bit. But unfortunately, it hasn't given you a whole lot to suggest that people will commit heavily to this area. And as an investor, that's all you're trying to do. You're trying to find moments in time that make sense to commit your dollars. And hopefully you're not the only one jumping into the lake, right? And so it's like that old saying goes, if everybody jumped into the lake, would you jump into the lake as well? Or what is it? If everybody jumped off the bridge, would you jump off the bridge too? And a lot of people think the answer is no. The answer is yes. You just don't want to be the first person to jump off the bridge. Let everybody else jump off the bridge and it builds up this pile of bodies. By the time you jump off, you didn't really fall, right? So it's okay. That's a horrible analogy, but that's the stock market in a nutshell. You just want to jump off the bridge after everybody else does, or at least in sequence with them. And we're just not seeing that right now. There's not a whole lot of commitment right there because we don't have anything to show aggressive buying. We have no increase in consistent volume. We have no immediate like reversal day where you see like a big gap down and it just flies forward real quick. We have no day that opens and then never goes down. It just only goes up. We haven't had that. Today is that's why I say there's just a little bit of a change. Today's rally, midday or so, today's rally was broad, but wasn't aggressive. And I say it was broad because if we look around the market, you basically had everything playing along today. Almost every sector was higher. The only sectors that didn't participate was financials and kind of broadly there. There was just no interest over there. And consumer discretionary, which really wasn't that bad in itself. It almost finished even on the day. Other than that, who led the way today? What was the leading sector? Out of all sectors, it was the utility sector. That doesn't lead the market. What was next? Consumer staples. That doesn't have enough say in the stock market to move it. But when you add in real estate, technology, industrials, materials, communications, energy, and healthcare, that's a broad support of the market. You guys familiar with heat map? You ever look at you can look at the market performance in the form of a heat map, and you just like one image shows you everything going on in the market. It's really cool. Well, if you look at that today, you'd only see a little red for financials. You would see just a touch of red in like the banks. Of course, Tesla would be one of them that had a rough day today. Ever so slightly in healthcare, just a few names over there. Energy had only, I think, one name that was lower. Phillips 66 was. Other than that, broad green. So if we go back to the S&P here, you say, I'm optimistic now. Where did it go? Right there. I'm optimistic that people are starting to believe this is support, but I don't know if I can trust it just yet. One little bit of bad news could send us the other way. Because why? One little bit of news today sent the markets higher. In fact, it was one guy. His name is Rafael Bostic, right? I don't even know if you say Bostic like that, but he's a Fed president. And he said that I firmly believe we should stick with quarter-point rate hikes. That was enough to get people to broadly buy the markets today? Yeah, turns out it was. So that's one guy saying one thing. Tomorrow could be the tiniest little thing that causes tech stocks to fall a little bit, which will drag down the market. So that's a long way of saying we're not out of the woods. I don't know that we can certainly convincingly trust this. It may be worth a nibble, but that's about it. All right, if we look at the Dow for the day, it's a little misleading over here in the Dow, and that's because of Salesforce.com. Salesforce.com, in fact, was more than 100 points easily in the Dow was because of Salesforce.com. And so when you look at that, you say, well, my God, it outperformed. Yeah, kind of, right? It's still down 4.2% for February. Will March be a record month for the Dow? Meaning, will it have the biggest gain almost that it's ever had? Will it rank in the top 10 of the biggest gains ever? No. It's an easy one. We can tell you, no, it definitely will not. It may be a good month, but it will not be a record month. You know how we know that? Let's go on over here to this real quick. Here are the top 10 best performing months in the Dow for the last 100 years. 1932 in August, 35.7. Could you imagine that? 35%. Now that's a recovery rally, but 35% in 1 month. 1933, you just got to imagine the volatility they were living through back then. Doesn't matter that the Dow was a lot cheaper than it is now. That kind of volatility is intense. Look around. Has there ever been a month that has a 3 on it down here? March is just never a record month. Doesn't mean it, I guess it can't be at some point, but it is not. The action doesn't happen in March. The excitement doesn't happen in March. The closest that we have is 10th place in October of 2022. And that was a recovery rally itself, right? October of last year. So it is very, very unlikely that we're going to see that happen here. Also, I want to point out in the last 5 days, the biggest contributors in the Dow, it's not uniform. We don't have green on the screen, just filling up the screen. We have a handful of names lifting, or I should say, supporting the Dow here. And then today, Salesforce, of course, kicking up the back there, pulling up the Dow. But otherwise, if you look at the Dow, can you convincingly say that's a bottom? Maybe a little bit more than the S&P. I'll give you that. But not convincingly. The NASDAQ, same thing. All right, decent reversal day here. Maybe. Yeah, something, right? I'm still going to sit on my hands and see what happens. I'm okay to see if other people want to come along and buy this thing, but for the moment, it's tough to trust. Gold pulling back ever so slightly after a tiny bit of a bounce, even after the comments about the quarter-point rate hikes. These stinking yields, man, they kept moving higher. Prices of bonds falling so rapidly here. What I see, a 30-year... Now, I just Googled it real quick. Let me see if I can see. 30-year mortgage rate. It was like 7-something. In Florida, 30-year fixed rate mortgage, they give you a credit score of 7 to 720, 7.49%. Let's just call it 7.5%. So it's going to get a little worse, too, because when we go look, we know the bond prices are moving lower, yields are going higher, and that's all the talk of the town right now is that kind of stuff going on. Whether it's short-term or long-term, they're all seeing an increase. Oil seeing a little bit more of an increase, but this is still in no man's land. So I can't focus on it because I don't have much to offer there. You know what I mean? I don't know. In the S&P, Salesforce.com is going to be your leader. Interesting, some healthcare stocks, some semiconductor stocks were also at the top there. Your biggest loser today is Tesla. I guess people weren't impressed with the investor day. I read through a lot of the specifics they gave. It's just they were specifics on how to change the world towards being sustainable in electric. And so they gave a lot of these sort of boring data points and stuff. People were looking for a mock-up of a car. Ooh, look how cool that is. They didn't get it. People were looking for a mock-up or an update on that big truck it's kind of growing on me. They didn't get it. There's not a lot of like fancy, flashy stuff going on there. And so understandably, that's what happened today. Okay. Okay, let's do something here. So if we go back over here for just a second, remember this one. We just shared this with you the other day. We said, okay, here's the year-to-date returns in black with the dividend yield in blue. So obviously these are growth type areas. Don't really care if they pay a big dividend. But as you come over here, Utilities, big decline, not enough yield to offset the decline at the moment. I thought we'd take a second and look through some of those sectors and see what the most overbought and oversold stocks are. Got a little bit of a list here to work through with you, and we're going to start with utilities. There are no overbought stocks in the utility sector right now, so just to give you a heads up there. The most oversold stocks, if you want to take a look, American Waterworks, AWK is the ticker symbol. You can see, obviously, sold off and extended. Ooh, Alliant did bounce today, actually, so sorry about that one. We'll crash that off the list, starting to bounce. And so is Duke Energy. Very, very extended. So if you look at that sector and you say, I like buying discounts that are sort of waterfall drops. See that kind of waterfall there? Well, then those are a couple stocks to look at from the data point of view, right? I'm not saying those are great stocks to buy. I'm saying those are the most oversold so that I can protect myself and not get in trouble there. Okay, back over here. What do we have next? Healthcare. We know that healthcare was one of the supporters today. So do we have something that we can use in the healthcare space? Oh, my list just disappeared. I'm going to go over here real quick. We'll pull it back up. Here we go. Most overbought stocks in the healthcare sector at the moment is going to be West Pharma. That comes on the heels of their earnings, of course. So that's one of them there. What was the other one on the list there? Biorad, I think, which is not really overbought. Remember, an oversold sector, a stock that's overbought doesn't have to do much to make it onto a scanner. And, oops, no. Where was the other one? There we go. Catalent. There they are. And that's coming after earnings as well. Most oversold stocks. We could have actually built a bigger list. I just tried to pick 3. Waters Corp is already starting to bounce there. Sorry about that. I'm a day late on giving you these things. Abbott Labs, still very much extended. One of the more oversold stocks there. And if we go to Picklemeyer, that's how I say it. I know that's not the name of their company. Picklemeyer, they're a little bit of a bounce. What do you know? What are we learning from that there? We're looking at stocks that are the most oversold, and those are the biggest bouncers. So we know that people are interested in buying this oversold area of the market right here. So if I had to run like a really geeky kind of a decile analysis on what was the best performers today, we're going to find the best performers come from the worst year-to-date performers. People want that discount at the moment, and that's a really, really cool way to show that without wasting too much time. All right. Salesforce. Stocks in the news here. Sales, obviously, you saw it. A big day for Salesforce.com. Beat on earnings. Everything was better than expected. Raised their guidance going forward and said, take that, government. We're going to buy back $20 billion worth of stock. They weren't the only ones here today, FYI. Best Buy. Actually wasn't a bad earnings report. The big kicker for them was the CEO, and I don't remember the words exactly, said, yeah, those numbers look good, but you don't want to know what it's going to look like going forward. It's probably not going to be good. Well, that's what hit the stock for the day there, and that's what's going on. Tesla, a little bit lower here on the day, and we know why. That's just kind of, people didn't get the flashiness from Elon Musk that they were hoping there and from the others. You got Snowflake. So Snowflake beat on earnings as well. I found this interesting because, it's okay. Earnings were better than expected and all that stuff. And they even said they expect their sales growth that they're currently seeing in this quarter to come in at about 40%. That wasn't enough. And believe it or not, that was on the low end of what people were expecting. I think it sounds pretty good to me. And then Macy's, I'm pointing this out because the retailers today all did the same thing. Every single one of them. They beat on earnings. Revenues or sales came in as expected, but guidance was lower. Every one of them lowered guidance. You have AutoNation, American Eagle, Aeropostale, although they're bringing their dividend back. Best Buy, Big Lots, they actually said they see sales in the low teens, actually. Burlington lowered. I don't even, Hormel, we don't have to go through all of them. Macy's, of course. Utz Brands wasn't good in the retail space. So if you're looking for something negative there, that's pretty coincidental that they all at the same time lowered guidance, brought down expectations, thanks to a softening consumer. Tomorrow, not really anything in the way of earnings. We do have Fed president speaking all day. Well, wait a minute. Let's go back to the beginning of the class here. We had one person, Fed member, raise the markets today. We have just two. We have two Fed members talking tomorrow. So there's the opportunity for them to confirm what was heard today, or maybe disagree a little bit and show what they call dissent. That's the famous word that they like to use when they're talking about how they feel about each other. It's the polite way. It's the golfer talk way of saying, I disagree with you. Jazz After Dark here tonight. We're going to talk about dividend portfolios. I'm going to scratch the surface with you. So I'm going to talk about volatility and total yield in dividend portfolios. If you're going to build something or you're trying to build something, some considerations there. Got some cool stats and data to share with you. So it'll be a little bit of a teaching kind of a class. And then if it does well, you guys like this sort of thing, we'll go on to the next level of geekiness there. I will now attempt to answer your questions. Let's see if this still works. It's all working pretty good. I'm not complaining here so far. Dissent, you got it there, Doc. Dissent. And Kirk's saying tomorrow is going to be a red day. Okay, and you're going on red. You would be statistically correct for this year anyways. Not a lot of data, but this year you would be correct on that one. Surfer, do you like VBK for small cap ETF? I would compare it to the IWM. No, it's going to beat the IWM. And I would, well, it's not beating it now, but I would compare it to that. And if you have the ability, look at all small cap growth funds together. So I'm not really partial to a brand. We don't deal with brands around here, so it doesn't matter to me. I would just want the best growth performance in the small cap space. That's what I would be thinking. You want China to go red again? It was another good night for them. Actually, it started strong for them. It didn't finish as strong. Got a handful of names that did well, but maybe there's a chance there. Hey, sitting on one's hands right now, a bad thing for someone who is already retired? Yes, because you ideally would have already made your adjustments for your buckets. And I shared this on a class the other night, 2 nights ago. Your buckets are already outlined. So for the foreseeable future, whether you like a 2-year cash bucket, 3-year, whatever it is, that's already been accounted for. So you're happy to sit on your hands, presuming that has been done. Yep. You think the whole month's going to be like February? I'll take the other side of that bet. How to invest for retirement. That looks like the title of a video. What happens can I just do this without people yelling at me? What happens if you search how to invest for retirement on YouTube? Hey, Dustin's number 2. That may just be me logged in there. Dustin's number 7. Hey, he's on there. Ooh, look at me go. Okay. So I don't know if that's a question or not, but I got distracted. Go ahead and pin that into YouTube there and see a young Dustin pop up. Tom says, what do you think about starting long-term position on Pioneer, large dividend and a CEO stock buybacks there? You have the tide going in your favor, hands down. Really anything in the energy space other than Phillips 66, you've got the backing of the company, knowing they're reinvesting in their own stock, if you want to say it that way. And of course, you get the nice yield along the way. So I have no problems with that. Your 401k amount still up and down. Yeah, if you get monthly statements, that's true. You would see, I think what they're saying is, I see my January statement, 401k is up. I see my February statement, which just came out. I was back down again. That's true. I didn't think about that. Yeah. What about Brazil? You want to chase Brazil financial wisdom, or is it too late to chase Brazil? They're still killing it. Yeah. What type of stocks or ETFs should you be invested in once you're retired? Oh, sadly, that's too general of a question because, and I'm not beating around the bush here, but I have clients that say, you swing for that fence, Dustin. I want to be as aggressive as possible. I don't care. I can handle it. And I have other clients that any little bit of bad news and they feel like, they feel that in the economy and they say, I don't know about this economy, and they want to be much safer. So I don't have a general answer for that one. Sorry. I'll take number 5, Justin. Look at that, man. Kirk says, taking risks in a Roth IRA but playing safe with children and started different life insurance policies for them. Well, I'll agree with part of that. You're in your Roth IRA. I would say 8 times out of 10, if we compared all clients here, we would find that their Roth IRA is one of the smaller accounts compared to all their other investments. And not only that, it's tax-free. Yes, take the risk in the Roth. It's also likely the last account you will touch in retirement. Many times when I'm modeling out a withdrawal strategy for somebody, I'll push that Roth out to the back, and I can show how they'll actually end up with more money if they're crafty. We're financial advisors, jazzwealth.com. Check us out. I forgot to say that. You like the healthcare stuff. There you go. Yeah, so there's Doc's saying, I like a discount. Utilities may be a little boring for me, but I see what healthcare is doing. Good. Yeah, you guys are on it. C-Dub. Wow. That's a cool name. In a volatile market like this, do I stay in cash saving or for a house or dedicate some of the cash? No. Well, so you're giving me a year. That's what I was looking for. Don't do it. You have 1 year. Imagine if last year, it's this exact time last year, and you asked that question and you invested in the market, you'd be awfully disappointed right now. I don't know that that happens again, but with only a year to go, don't do it. Don't do that one there. Do a video on student loans. Yeah, there's a lot to talk about there, but I find that a difficulty sometimes. You know, I'll focus in on a subject and say, okay, I want to talk about 401ks for a while, and it's usually because I notice a repetitive mistake people are making or an opportunity that was missed out on, and so I try to cover that. AJ, why are defense stocks doing so well? You want to take a guess? Just one guess, one word, happens to be a country. I'll give you 2 words if you want to include the other country. I'll give you 3 if you want to say the country that happens to be giving the other country a lot of stuff and paying for it. I'll give you 4 countries if you want to say what we're ultimately trying to do in the background. Very cool. You guys get it, man. I love it. Hey, Jazz After Dark tonight. If you're a dividend portfolio builder, I hope tonight's class makes you ask questions. That's really what I'm doing. And so please understand that, you know, that's the goal, is to get you to go, well, gosh darn it, I should have thought of it that way. Okay, let me go do it. And then you go start to do it and you say, okay, this is not as easy as he made it look to be. Let's try something different, right? You got it. Hey, tonight, by the way, for clients of Jazz Wealth, Eric will be joining you for Wine and Wealth. It might be a beer and wealth night from the looks of it so far, but he'll be joining you tonight. New client orientation. He's going to take you from start to finish, everything that you have here. Oh, it is beer. I heard it. I heard the thing go off. New clients, right? Everything that you get here at Jazz, how to take advantage of it, what we're here to help you with, which is anything and everything that touches your dough. And I'll wrap it up and get out of the way and let Eric prepare for tonight. Thank you guys for watching. Appreciate all of you that enjoy watching the show. And we will see you when we see you. Adios.